Welcome. During our project, we explored the industry's view of both existing and new business models in transaction banking. We will start with our approach towards the project and subsequently share our findings. But before we share our findings, we would like to learn more about your view. So if we could please go to the poll question, and if everyone could get their mobile, and through Slido answer what's the most critical success factor for transaction banks to remain competitive. And while you are answering this question, let's proceed.
Continue.
While transaction banking is the rising star in financial services and opportunities lie ahead, the industry is also seeing fierce competition among new entrants. As a consequence, margins and revenues are squeezed in a commoditizing business. And this raises a very valid question. What does the industry need to do to protect and grow the future of payments and trade finance? And this is exactly the question that we try to answer. We started with literary research about transformation of business models, and subsequently we conducted qualitative research by interviewing 19 senior managers in order to get a better feeling of what's happening in the market. So if we could have a look, please, again at our poll answers. Okay, interesting. So investing in innovative solutions is on top there. Let's have a look whether this matches our findings. Adrian?
Thank you, Amresh. Technological disruptive technologies are accelerating, with the metaverse and ChatGPT being only the latest example. Our activities are and will be even more strongly impacted, forcing us to revamp our transaction banking business model. So what are the trends for the future? First, real-time payment will be the norm. Some 55 countries already have an activated instant payment system, and the annual global volume growth is 63%. Secondly, as proven by the emergence of the various coins, there is a strong demand for enhancing cross-border payments, which are now perceived as less efficient than the domestic one. Financial Stability Board objective of speed, accessibility, affordability, transparency could be reached by interlinking the various infrastructure, as the IXB and Nexus project aim to do it. Consequently, banks will have no other choice than to compensate the reduced margin by a volume effect and streamline their process. Data could be helpful on that matter. Using AI and machine learning will help us to automate most of the manual work, while leveraging client data history will permit us to propose tailored, higher value services to our clients. Two last trends, maybe more tied to the trade finance, the use of blockchain, which will enable companies to prove any transaction detail securely and digitally, and the shift to sustainable finance, which is now a requirement from our clients, but also a great opportunity, as shows the multiplication of the sustainability linked loan, rewarding the greenest clients. In a nutshell, the use of technology in the banking industry will continue to evolve and expand, leading to increased efficiency and convenience for our customer. Brace yourself, this is only the beginning.
So, why collaboration is essential in overcoming the challenges that we just saw? The financial industry has seen a rapid growth and innovation, especially on payments, foreign exchange, e-commerce, and some niche markets. Fintech companies are the ones driving these changes, continuously innovating and creating new opportunities for consumers. So when we asked banks how do they envision their future with fintechs, 100% of them responded with the interest in collaboration. So when we look at the synergies between banks and fintechs, there are many areas where they can form powerful partnerships. Development and innovation. They can capitalize on each other's strength to create innovative solutions. Compliance and risk management, Fintechs can help improve their internal processes to meet those issues. The customer experience can be as well enhanced by providing digital platform and empowering the client-centric culture. The optimization of costs is as well very essential and crucial, so that can as well be helpful with the fintech partner. Open banking APIs allow seamless integration and a legal, more connected ecosystem. So once we say that, we should not forget that there are some challenges that we must overcome. The cultural challenges. Fintechs, banks, we're not coming from the same world, so we have to keep in mind that there are cultural challenges. The regulatory and compliance is another challenge. Fintechs may lack expertise on that domain. Data security and privacy are crucial, and both parties must maintain 100% trust for their customers. So when we say that, I would conclude my part saying that innovation and collaboration are really key and essential to maintain a sustainable future for all of us.
Okay, so we've covered three things. We've covered the adoption of new technologies, new payment trends, and the evolving relationships with fintechs. And while we do believe banks need to invest in all of these, we also think that they need to couple that investment with what we've characterized as 3 organizational pillars. By doing this, it'll enable banks to set the foundation to be able to provide innovative solutions to our clients. So the first pillar that we're going to go over today is agility. And I know this has come up many times already throughout this conference, but according to a study, 82% of banks use manual processes. And I'd imagine that every one of us here can think of a manual process, or maybe 2, within our institutions today. And while those manual processes may present challenges, they also bring opportunities in terms of cost optimization. So with that, as we move towards the future, we recommend that banks look at their back-end systems and invest in those systems to be able to make them more scalable and configurable for future innovation. Next is resiliency. Banks have proven to be resilient over the years, and they will have to continue to be so as we move towards the future. With that, they'll have to continue to have their strong risk frameworks and their strong relationships with their partner banks, and they'll have to invest in continuity and in robust security. And finally, talent. Banks have extraordinary talent, and they have decades of talent, especially in areas such as payments, trade finance, and SWIFT. To help banks move forward towards the future, it will help them to diversify their talent pool and include additional areas of expertise, such as perhaps with employees who have experience in innovating based upon machine learning, artificial intelligence, and blockchain. And lastly, digital transformations will be a key determinant of success for banks. And interestingly, there's a study published by McKinsey that of the digital transformations that fail, 70% of those failures are due to resistance among employees and misalignment in the change management process. So with that, to bring this all together, it will be important for banks to invest in their change management processes to make sure they're more streamlined and so that we can deliver innovative solutions quicker, and then also cultivate change management-centric minds within our organizations.
Well, to conclude, there are 3 takeaways I want to give you in order to protect and grow the future of trade finance and payments. The first is to continue to invest in developing your internal process with the use of existing technologies that will allow you to increase efficiencies. The second is to partner with strategic non-banking providers like fintechs that will allow you to meet your strategies, for example, enter new markets or products or reducing your costs. The third, as Rebecca just mentioned, are continue investing in developing agility and resilience in your organization, while at the same time attracting and retaining key talent. But the main message we want to give you today is that there's no one mix of solutions that will fit you all, because there are as many strategies as there is banks out there. The right path for each one of you will be dependent on what your customer value and what your own goals and where ambitions are. So what we do know is that to drive sustainable growth, The future will require a combination of digital, innovation, and collaboration across all players. Thank you for listening, and we can move to the Q&A now.
Thank you, Pia. It's good to see that a lot of questions are being asked. And we are in San Francisco, so let's start with an appropriate one. What role will tech companies play in the evolution of transaction banking? Johnny, may I ask you to answer this one?
Can you hear me good? Yes, good. Sure, thank you, Amrash. I think the future of transaction banking is definitely a technology-driven industry for sure. And I remember that I read a news from Yahoo Finance. CEO of Bank of America said that we are clearly a technology company. And this statement demonstrates that technology is really an important pillar for banks. And I think that's special for transaction banking. So for the technology companies, I think banks can cooperate or leverage the cloud service provider like Google Cloud to build up its resilience infrastructure and system. And for Meta, I think we just heard from our previous team that and we may cooperate with Meta and to use AR or VR as a channel to provide the customer a transaction or have a different customer engagement experiences. So I also heard that from Bank of America already provide VR training to employees, and BNP Paribas also announced an application to allow its customer to conduct transactions through VR. And I will take one more example from my company, BNY Mellon. We also cooperate with Microsoft. We moved wire payments into Microsoft Azure to increase the resiliencies and the capacity of payments. So for this kind of examples, we understand that technology companies will be a very important roles for the evolution of transaction banking. So back to you, Amrash.
Thank you very much, Yanni. We still have time for one more question. How is commercialization of data creating an opportunity for transaction banking? William, could you help us out with that one?
Okay. Data, we are using data currently, and we're using it for internal purposes. We're enhancing our processes, our customer experience. We are utilizing it. And but to do that, to be able to do that, we are facing the challenges of having high level of data governance, of having valuable data, of keeping it updated, accurate. But these are not the real challenges. As bankers, we have been selling the idea of confidentiality. We have been telling our clients that what happens at the bank will stay at the bank. But now we have changed our mind. We want to be able to use this data by keeping the confidentiality. Therefore, there's a line that we need to draw, and I think that line could be drawn if we identify sensitive data, if we clearly, because we hear this word, but what is sensitive data? Is my name sensitive? Is my age sensitive? What is sensitive? So it has to be loud and clear what is sensitive data. We need to seek the acceptance of our clients because we keep on talking about being customer-centric. So we need their acceptance, not just to look for a legal consent, because to avoid the lawsuit. It's by seeking their acceptance, by identifying what is sensitive data. Data is definitely the new gold.
Thank you very much, William. Still some questions left that weren't answered. Our white paper will be published on the BAFT website, but I would also like to ask the audience to reach out to us during or after the conference because we are happy to answer any question. And we would also like to make use of this opportunity to thank the BAFT organization for this great experience.